On Saturday, the 22nd of August, 2026, the crypto industry has just escalated its fight against Illinois into a full legal war. Two of the most powerful lobbying groups in the United States, the Blockchain Association and the Crypto Council for Innovation, have confirmed they are jointly suing Illinois over the Digital Asset Tax Act. This is not the first challenge. The Digital Chamber filed its own initial lawsuit back in July. But today's announcement turns a single-state dispute into a coordinated national test case. The law at the center of all this is deceptively simple: a 0.2% tax on covered digital asset transactions, due to start on the 1st of January, 2027. What makes it explosive is that Illinois is the first state in America to create a transaction tax aimed specifically at crypto. That means whatever happens in these courtrooms could define how every other state treats digital assets for years to come. To understand the fight, you have to go back to the 16th of June, 2026. That is when Governor J.B. Pritzker signed Senate Bill 3019 into law, burying the Digital Asset Tax Act inside the state's $55.9 billion budget for fiscal year 2027. The tax applies to businesses transacting or storing crypto for Illinois residents, as long as their total receipts are above $100,000. Official state budget documents estimated it could raise roughly $60 million a year. But here is the detail that infuriated the industry. Cody Carbone, CEO of the Digital Chamber, says the provision was slipped into the legislation the night before final consideration. So the state set a national precedent without a dedicated public debate. That process failure is now feeding the legal argument that this was rushed, poorly designed, and unfairly targeted. The past 7 days have been critical. On the 21st of August, the Crypto Council for Innovation and the Blockchain Association filed a new lawsuit in Sangamon County. Today, on the 22nd, they publicly announced it. This second lawsuit expands the legal front beyond the Digital Chamber's earlier complaint. The new filing argues the tax violates the United States Constitution, the Illinois Constitution, and the Internet Tax Freedom Act. That last point matters because the federal law was designed to prevent states from creating discriminatory taxes on internet-based transactions. The industry's argument is blunt: if you sell shares through a traditional broker, you do not pay this tax, but if you transfer a crypto asset recorded on a blockchain, you do. According to G. Kim from the Crypto Council, taxing digital asset activity without an equivalent tax for traditional assets unlawfully picks winners and losers through the tax code. Let's talk numbers, because this is where the state's case gets uncomfortable. $60 million a year sounds meaningful until you compare it with the broader crypto economy. Bitcoin itself has surged roughly 25% in days, trading near $80,000, partly because of a Treasury buyback adjustment. Illinois is choosing this moment to tax a high-mobility, high-innovation industry. Brian Armstrong, the CEO of Coinbase, did not mince words. He said the Illinois law is remarkably bad and will end up hurting the state and killing jobs. Coinbase says it has more than 1.5 million customers in Illinois alone. If exchanges, custodians, and startups relocate or stop serving Illinois residents, the state could lose far more in income tax, payroll tax, and investment than the $60 million it expects to collect. Critics call this a classic case of seeing a small revenue line while ignoring the larger economic base. Right now, before the tax even starts, the uncertainty is already doing damage. Businesses with more than $100,000 in crypto receipts are being told to prepare for compliance costs, transaction tracking, and possible double taxation. The Digital Chamber's lawsuit argues the tax would subject crypto assets to double taxation, or worse, because the same economic transaction can be taxed again as property or income elsewhere. For an everyday holder in Illinois, the real danger is that platforms may simply block services. No company wants to build expensive systems to collect a 0.2% tax if they think the law will be struck down in 6 months. So instead of clarity, you get hesitation, fewer trading options, frozen product launches, and local startups asking whether Illinois is still worth it. Representative John Cabello has already introduced a repeal bill, saying the tax penalizes technology and signals that Illinois is closed for business. If you look closely at the lawsuits, the industry is not just complaining about the rate. They are attacking the design. One core argument is that the tax discriminates based on technology, not on the substance of the transaction. The Digital Chamber puts it this way: economically identical transactions should not receive different tax treatment simply because ownership is recorded or transferred through blockchain technology. That is a clean legal test. Another weak point is the Internet Tax Freedom Act. If a court agrees that digital asset transfers are internet-based transactions, then a state tax aimed only at crypto could be preempted by federal law. There is also a practical problem. The tax could apply even when the holder makes a loss. Taxing losses is politically toxic and legally questionable. These are not trivial arguments, and that is why the industry groups chose Illinois as the battlefield. So where does this go from here? The most important date is the 1st of January, 2027, when the tax is supposed to take effect. Before then, expect the industry to ask for a preliminary injunction, which would stop enforcement while the case is heard. Illinois will likely defend the law by arguing states have broad power to raise revenue and that crypto has been treated as property before. But even if the state wins the first round, the appeal process could take years. In the meantime, other states are watching closely. If Illinois survives, you could see copycat taxes in states looking for easy budget fixes. If it falls, it sends a signal that technology-neutral tax design is essential. The imminent fight is not just about $60 million. It is about whether crypto is a normal financial asset or a special target for lawmakers. The Illinois Digital Asset Tax Act looked like a small budget line item. It has become the most important crypto legal case in the United States today. The lesson is simple: when a law is drafted in a rush and targets a specific technology, it invites years of litigation and business uncertainty. For viewers, the practical takeaway is to watch the Sangamon County Court, watch whether an injunction lands before January, and remember that a 0.2% tax can reshape an entire industry. Illinois is now the test case for America's digital future. If you hold, trade or build in crypto, this fight will affect you even if you have never set foot in Illinois. That is the real story on Saturday, the 22nd of August, 2026.